groups. So for those of you who are affiliates of FX Legacy or Caribbean Blue, that will be available to you in our Facebook group. All right, so let me share my screen. Right. So really what I want to talk about with you guys is following. I know that many of those that have joined now will be new to ForEx trading, interested barely, or some of you who just want a refresher. And that's what really the session is all about. So we're looking at Japanese candlesticks in particular. Now that is the most popular and most common charting display that you'll see that many of the technical analysts in trading will use. What it does allow traders to do, it allows them to identify if a trend is strengthening either towards the buy or the sell. And then, of course, together with other tools, they'll be able to identify entries into the market, which is the whole point. You want to buy at a low point to make as much money as possible, and vice versa, you want to sell at a high point. And this, being able to read candlesticks will allow you to do exactly that, to understand when is a trend weakening. And so let's get into that. So basically, two parts, two major components to candlesticks, right? So you have what we refer to as the body. You also hear other people talking about the candle, and you have the wicks, right? If you picture yourself an actual candle, that will come very close to that. Now, the body itself, it shows us the range from the opening price of a session to the closing price of a given session, right? And the wicks, or shadows, as you may hear as well, will show you the high point and the low point. Now, a session can be anything from be a daily session, so from the beginning of the trading day to the end of trading day, which in Forex is from 5 p.m. Eastern time until 5 p.m. the next time Eastern day. That is, those 24 hours represent the trading day. Or it can be an hour, it can be 15 minutes, whatever time frame you're looking at. One of those candles represents that. So if you're looking at daily, it represents a day of trading, where the price has started, where the price has been, and where a price ultimately closed at the end of the session. Let's look at the bullish candles first. Now, when we refer to bullish and bearish, all we mean really is bulls are the buyers and the bears are the sellers. So if I'm referring to a bullish candle, it means that the buyers here have control. So the opening, or the closing price rather, the bullish candle is higher than the opening price, as you can see here. Now, here, let's say we start from here. So this is where the session started. This is our opening price. During the session, the price at some point moved all the way down to this point. This is our lowest price, and traveled and this range right here to the highest point, and then settled and closed here. So that's what we're looking at.
Just soak it for 2-3 hours, and then I brush it with a toothbrush.
So that's where we were looking at in terms of a bullish candle. Now,
I don't clean up the bottom usually, I just leave the bottom.
Let me just mute you. Thank you. Bullish candles are either represented in green most often, or in an open body, as you can see on the right. The white one right here, depending on the chart, the tool that you use will let you do that either with the green, white, or open body, or you can choose any color you want to. You just need to make sure that you remember what color represents which. Right? So the opposite, of course, the direction would be the bearish candle. So you're looking at a closing price that is below the opening price. And during the session, the candle could have, or the price could have traveled all the way up to this point, all the way down to the lowest price and settled here. But as long as the closing price is below the opening price, we're referring to it as a bearish candle. And again, this will represent that here we have had more sellers in the market than buyers. So let's look at some variations of candlesticks that you'll come across, and they all represent different strength in the trend. So we're looking at from left to right here, so being the strongest bullish candle you can find, all the way down to the weakest over here. Right? And same here, we have a very strong bearish where we opened with no wick to the top and closed with no wick to the bottom. Which means that a lot of sellers here, of course, are in control. And you have to look at the market like a constant struggle between buyers and sellers. Right? So you always have buyers trying to take control, sellers trying to take control. And when you enter as a trader, of course, if you're entering a trade, you're hoping that you're on the side of the strongest faction in this case, right? So smaller wicks, like for instance here on a normal candle, will show you that. So we have the opening price here, that we have a very strong buying momentum, and sellers have entered at a few points, but they weren't really able to take control of the market here in that session. Now, when you look at one of the weaker candles, it will show you, okay, we opened here, we traveled in terms of buyers, pushed the price all the way to the top. And here's where sellers would have strongly entered at a given point and driven the price back down to this closing price. When you see something like that, it also indicates that, for instance, a lot of buyers would have taken their profit based on a take profit or an exit they would have already implemented before, or when they see that price is dropping, then more and more people are saying, oh my gosh, how much is going to drop? Let me take profit, and it drops and drops, and more buyers are actually exiting the market, giving the sellers a stronger control over the market. So which is why this here is considered a weak bullish. And in reverse, we're looking at bearish. Here we don't have any buyers basically participating or taking control of the market. Whereas when you look at this, buyers had some control. We started here, they may have pushed the price up here where more sellers entered and pushed the price further down, and here some more buyers may have started up again, but it wasn't enough to really take control. And now we're looking at this, the weakest of the bearish candles, right? We're looking at the starting price, opening price here, price pushed all the way down to this point where either a lot of sellers exited the market or a lot of buyers, both can certainly happen as well, would have entered the market to push the price back up to where you're seeing the closing price right here. So let's look at the candles in detail. Now, as we said, we are the opening price at this point in a strong bullish candle. This is what you may encounter when you break it down. Let's say we're looking at this in the day. This represents 1 day worth of trading. And we break it down into the 4-hour. So this, over the course of the individual 4-hour sessions, we may have had strong bullish, a few bearish, and ultimately the buyers prevailed and pushed the price to the closing price. And there were no sellers basically left in the market to push it back down. In this, say, medium strength bullish candle, you're starting here, and sellers may have pushed the price down to this lowest point where more buyers would have entered the market, pushed it up, and ultimately to the high point where some sellers entered, and we would have had a closing price here. Sorry. Right. Let's see. On the weakest candle, you're looking at an entry price here, an opening price, and you push all the way to the high point at which the sellers entered the market to push the price all the way down to the closing. And you can see why this can strongly indicate a weak bullish or a strong bearish trend starting, because They're pushing it all the way down. Up until this point here, to the high point, the buyers had control there. Everything is going well. Sellers are just waiting for the opportunity, which they get. And then as they get this opportunity, they increase in strength and in numbers and push the price down here. And the same can, of course, be done in reverse. We're looking at the very strong bearish candle, and we open up here, and at the end of the session, closing, the price would have closed here. There are no buyers basically at the end, so pushing the price higher from the opening or from the close. Right, so there's a very strong seller's control over here. In a medium with a few wicks, it can also look at it this way. We have at the beginning, we have opening price. Price pushes up to a high point at which more sellers enter the market to push the price further down, all the way to the low. We have few buyers enter, but it's not enough to retain control, and we still have a relatively strong bearish candle. And ultimately here, looking at a high opening point, pushing all the way down to the low at which now the buyers or bulls would take control and push it all the way down up to the closing price. Now this here will also indicate a possible reversal in trend. We're having all these sellers in here exiting the market, quite possibly, and buyers entering and pushing the price back up. Right. So let's look at a few examples in the live charts, right? So this right here, that what I've highlighted, is a very strong bullish candle on the 4-hour chart of the British pound and Japanese yen. Now, if you break this down, let's say, into its components, in the hourly chart, you see that the session started off right here. Right? So no sellers were in the market, it didn't push down. And we have consistently buyers in the market. Now, these all in the candlesticks, whatever has happened in the middle, can also be further broken down. And then you can see, okay, at what point did sellers enter the market? Clearly, at this point here, sellers thought they had a shot. You know, sellers entering the market, pushing the price down. Here we have basically an equilibrium between buyers and sellers, and ultimately at this point is when buyers took control again and pushed it all the way up to the end of the session, where we closed without a wick, so no sellers pushing back down the price. Sorry. Right, so this right here then, the next example is looking at a strong bearish candle. Same concept. So when on the daily chart of the New Zealand dollar and the US dollar, we're pushing all the way down, no wicks to the top or to the bottom, and then we break it down into a component. We can see, okay, this is where the session started. So we break it down into 4 hours, right? So we look at 6 candles for this part. At the beginning and the opening price of the session, we have no buyers, all sellers. Everyone is pushing down the price. Here we have a few where we are basically in equilibrium, but then followed again by relatively strong candles and closing at a point where there are currently no buyers in the market to push the price up. Let's look. Let's look at a weak candle. Right? In this case, a weak bullish candle. Looking at the Aussie dollar, Japanese yen on a daily chart, we break it down into the components. And it does want to change. Right, so looking at the components, this is where it was the opening session. Right? So price pushes up very strongly. Here we have a few sellers entering the market, pushing the price down, but ultimately buyers push it all the way to the high point. At this point, you can argue that buyers are either exiting because they've already had their automated exits, trade exits, or additional sellers are entering at this point because they have identified a certain entry point. In any case, it pushes the price all the way down, right? A very strong candle here. Here we have somewhat of an equilibrium, and bulls a little bit winning out, both of them still fighting. But when we look at the opening price right here and the closing price right here, you can see that it didn't move quite as much. Right? So in that session, we've moved all the way to the top, and then bears were beginning to take control. And that's what we're looking for. Right? And especially when we're looking at trend reversals, as you can see, we have a strong trend up all the way to this point, and we're looking, you see a trend reversal. So let's look back at the daily. Same thing, strong trend up. We're posting a weak bearish candle with a long wick to the top, indicating that at this point sellers are in control, and you see the price pushing down. And that's what we use candlestick analysis to give us an edge in the market. Example again for a weak bearish candle here. Right? So a lot of time what you also refer to as a hammer, but that's something that we'll get into later sessions. Here on the hourly chart for the Aussie dollar and the US dollar, we posted weak bearish with a long wick to the bottom. We look at the components in the 15-minute charts. A very strong candle, almost without any wicks to the top or to the bottom, pushing down the price. And we have an immediate reversal. At this point, it's clear that buyers entered the market, pushing the price all the way up here. Right? We have an opening price here, and at the end of the hour session, we have a closing price here. That indicates for us that clearly at this point, if you're going back to the higher time frame, buyers entered the market and very well took control, and then we just look for further confirmation. We look and see, okay, a bearish trend, immediate reversal here by this pin, and a long wick, and it starts to go bullish. It changes trend, and that is one of those candles that we look for to identify such a trend reversal. Okay. So now what about this one? All right, so this, it's not that we see a lot of, all the time that we see candles that have a full body, or at least a body in general, and that are easy to identify. These right here, we refer to as dojis, various kinds that you see in the literature. In this case, really, it shows us an equilibrium, right? Basically, a stalemate between buyers and sellers. So from the 4-hour chart, if you go down to the 1-hour chart to break it down, right here, this is our opening price. And at this bearish candle, price pushed up, but it ultimately pushed down and closed lower, followed by a bullish candle all the way up. Here, again, price push closing higher yet again, but then followed by a bearish candle, closing here. So these 4 1-hour candles comprising the 4-hour session in total, you see that your opening price and your closing price are basically the same. So you have an equilibrium. Okay? Indecision is basically the point in this. So these are something that we would look for instance, if we have a strong trend in one direction, and then all of a sudden both buyers and sellers are fighting for control, and we end up with a doji like this one. That indicates that the trend could be weakening, and that we can look for entries. But of course, we're not just going to enter trades just like that. We always wait for confirmation, because in this case, we see, okay, trend is up, doji, but it continues. So if we had entered into a sell, we would have been very bad shape here. All right, so this was really a very quick breakdown, very basic of the candlestick analysis, but it shows you that when you take it and you look at it even further and break it down to components, you understand much better what the dynamics are of the traders. Because just like us, plenty of retail traders are out in the markets, entering and leaving it. No situation is ever the same. So many people trade with indicators that are algorithms that are all based on exactly what we looked at, and candlesticks. So candlesticks will always give you the foundation. Once you know that, it will give you a very strong foundation on which to build on when it comes to further reading support, resistance zones, advanced patterns, harmonic patterns, old word patterns, like our bishop here would like to say. So without further ado then, I just want to open it up for any questions. Right? I believe we still have about 10 to 15 minutes, so anyone have any questions about what I just talked about, feel free to let me know. All right, just unmute yourself and give me a question. All right. Well, if there are no questions, I know you all be here because you are either already part of FX Legacy and Caribbean Blue, you're part of our Telegram group, or you just interested in saw what we had put out on Facebook. Yes, the recording will be posted, but only available to affiliates. Right? So let me just quickly talk about FX Legacy. We are a trading group, and we are a bunch of very enthusiastic traders from all sorts of life, countries. I mean, I'm right now in Trinidad. I know I have a friend right now joining us from Russia. We have a lot of people from the US, and we are from all walks of life trying to learn from the one and only J.M. Pips, who is our mentor and who's founded FX Legacy. And if you want to find out more about what we do and how we learn, and talk to either of us, hit us up. And any of the learning materials that we have, any sessions that we have multiple times a day, they'll all be posted, of course, in our affiliates group. If you want to become affiliate, let us know. Okay.
Appreciate it, bro.
Are you finished?
I am finished. Go right ahead, Raquel.
Okay, thank you everyone for logging in. I hope you all got some serious nuggets from Marcus, and look out for further what I could call it, workshops. Thank you guys.
There was one question. Yes, I do have docs on candlesticks. Again, I will share that with anyone who will be with us in our affiliate group. I believe, Kevin, you are, so I'll share that with you for sure. All right, thanks so much for joining. Everyone, enjoy the rest of the day. Have an enjoyable weekend. And next week, again, tune in for our next session.
Great job, Marcus.
All right, take care, guys.